Johnson, I need those policies written, and I need them written now. What do you mean you don't know how to calculate a transitional yield? What do they even teach you at Harvard? Differential calculus? Oh, that's cute now. Now, I need you to buckle down and go watch lesson 3 to figure this out. We talk about it all over in there. I hear you, honey. Okay, I know it's frustrating. Yes, don't get frustrated. Have a little self-care. A bubble bath? A bath bomb? Okay, and then you're gonna give me those calculations, yeah? All right, you take care now. Talk to you soon. Bye-bye. Sweet boy, I'm sorry you had to hear that. These Ivy League types just don't quite understand the ins and outs of crop insurance. But I will say, I've been watching you, and I think you have got a good head on your shoulders. You and I have discussed crop insurance generally, but there are some key details that apply to organic farmers. Now, in this lesson, you're gonna learn what those key details are. Organic farmers face enough challenges, and agricultural advisors need to be aware of the opportunities and the pitfalls unique to organic crop insurance, so their farmers, their sweet, beloved clients, get the most out of their coverage and avoid costly mistakes. But I have to share, after 3 lessons, I feel fatigued by all these educational forays, and I have some clients to visit. So, I've asked a friend, Nate, who you met in previous lessons, a bright light in our industry. I asked him to meet you down at the diner on the corner of 8th and Main. So get to it. See you later.
Gelda, how's it going?
Oh, Nate, hey, Nathaniel said you'd be here. Say, I'm interested in crop insurance for flax, but I know it's not a common crop.
Totally. So, because it's not really common here, you've got protection on your wheat and your corn and your oats. Because flax isn't a common crop here, it's not immediately insurable.
Oh, darn it.
But we're not out of the game yet. We can do a written agreement with RMA. Have you heard of those?
No, what do I have to do to get that together?
Pretty straightforward. We need to get a letter of adaptability from an agronomist. We need to get a soil map, and then we need to get your 3 years of flax yield history.
Okay, this is my first year growing flax, so can I not get it insured?
Actually, you still can. What we're going to look at is similar crops. So you've raised spring wheat or oats, and those are part of a table that the RMA puts out, which I can show you here, showing what are similar crops to flax. This table comes from the USDA's Written Agreement Handbook. Here, you can see that since we're requesting flax, similar crops are any other Category 1 crop.
Well, I've grown plenty of spring oats and spring wheat.
Exactly. So we can use 3 years of your crop history on either of those in our written agreement requesting coverage for flax.
Okay, that's not too bad.
All right, so since I've got you here, have you heard of the contract pricing addendum?
What's that?
I am so glad I beat Nathaniel to the punch and get to tell you about it because it is the coolest thing about organic crop insurance. So, with organic pricing addendum, we get to give you the option of insuring your crops against your actual contractor price. So when you go to sell this flax and you get contracted for $30 a bushel, you can insure against that $30 a bushel versus, say, the regular market rate of $15 a bushel.
Oh, that's fantastic. What do I have to do to get this done?
I'm glad you're as stoked as I am because it really is so exciting. So, simple process. When you turn in your paperwork by the March 15th deadline, you want to let us know that you want the contract price option.
Okay, so March 15th, spring planting date for flax. Got
Perfect. Yes. Locking that date down. So then, by July 15th, you have to send us the actual contract so we can submit it as part of your option.
Okay, but wait, what happens if I don't get it all done by that date? Do I have to pay that premium on that premium contract?
Wipe that look of worry off your face? No, you don't. If you don't come through with a contract or your market falls through, you can just get rid of that contract price, don't take it, and you go to use the regular market price.
Oh, great.
Pro tip line, you got a pro tip for me? Oh, that's a good one. Okay, hold on a sec. He says, always have contract pricing on your policies. so that you have the option to use the contract price if you want to. Great tip, thanks. Here's an example of the power of contract pricing. Without contract pricing, on the left, the farmer receives the market rate for their grain, $27.41 a bushel. But contract pricing, on the right, locked in that organic contract, even if the contract itself later fell through. You can see that contract pricing resulted in the farmer receiving about an extra $500 an acre. I mean, contract pricing is a big deal.
Awesome, Nate. I am so sold on contract pricing.
Yes.
Okay, so while I still have you here, my neighbor is starting to transition some of her acres to organic. So what does she need to know during this transition time about crop insurance?
You are the best neighbor for asking that question on her behalf, and I want us all to stay stoked because crop insurance for organic is awesome. Now, for transitioning farmers, it's a little bit tough. We know that the road to transition is tough in general, and organic crop insurance isn't a bright spot. So, when we think about what is unique to the transition, we think about a few things. One, the yield. It's called a T yield, and so what they take, because your friend doesn't have an organic growing history, she has no organic yields, they're going to give her just assign her a factor of 65% of the conventional yield for the county is her T yield during transition. And then one bright spot is that she can still take the contract price addendum. So if she can get a contract for her transitional grain, she can insure against that price, which is a little bit better than conventional. The sum and substance of it, though, is that she's going to be insuring for a transitional yield at that conventional, maybe transitional price, which is why she needs a team of folks, a good agronomist, a solid crop insurance agent who gets organic to help her through this kind of rough period through transition.
Great, Nate. Thanks so much. I'll bring that back to her.
Thanks for the question.
Well, sir, thank you so much for all your knowledge.
Absolutely.
I got to get back to the farm, do some cultivating.
All right, best of luck. Now, I wish everything on a farm could be covered under crop insurance. It just can't. So let's make the important distinction here between the events that are covered by insurance and those that aren't. You and the farmers you work with will want to be crystal clear on this because it will greatly affect the advice that you give your clients. So, what is covered? Losses in yield due to any natural cause, including weeds taking over the field if weather conditions prevented the farmer from their normal weed management. Now, what is not covered? 1. Planting into an existing crop and harvesting both crops without prior approval. We'll talk more about this in the next lesson. 2. Failure to follow good farming practices, like abandoning a crop after planting it instead of caring for it throughout the growing season. 3. Not complying with the USDA organic standards or the Farmer's Organic System Plan. 4. Crop contamination by drift of prohibited substances. 5. Destroying a field due to excessive weeds. Remember our friend Dale? Cautionary tale. 6. Not having your organic certificate in time. 7. The certificate needs to be in the same name as the insurance policy. Now, each of these examples of what is not covered by crop insurance happen to real farmers. Don't let that happen to any of your clients. As you work with more organic farmers, you'll come to see some major ways that their operations are different. One of the biggest differences is the greater amount of paperwork and the deadlines they have to meet for their crop insurance. You can provide some real value by being aware of these deadlines for things like submitting their organic certificate to the insurer. If a farmer does not have their certificate by acreage reporting, which remember is July 15th, the farmer needs to provide written documentation that they have requested a written certification from their certifier. Then the organic certificate must be in place prior to a crop insurance loss, which would be at harvest time. If the farmer still doesn't have a certificate at harvest, they likely will not get paid their claim as certified organic, but instead at the conventional price, which is a huge bummer. Take care of the farmers you work with and bring them value by being aware of and helping them meet these deadlines. Now, that's for your average experienced farmer. What about your beginning farmer? All right, I got to catch a ride. Maybe we'll run into a young whippersnapper on the streets.
Crop insurance street.
Excuse me?
Yes, sir.
Really a random question, but I'm looking for a crop insurance agent. Do you happen to know any?
No stuff. I'm a crop insurance agent.
are?
Yeah. What can I do for you?
Well, I'm newer to farming, and I know mitigating risk is really important, so what are my options?
So beginning farming. So have you been farming for less than 5 years?
This is my 6th season, but I've got 3 years of military, a year at college, so I feel 36, but I'm really 35.
Oh, is that so? Okay. Well, let's talk about your military service. Doesn't count against your time as a beginning farmer, nor does your time in college, nor does time before you're 18. So by the math, you're looking pretty good.
Wonderful, wonderful.
We do have a unique application that we have to get filled out for you. As a beginning farmer, there are lots of benefits. And we have to still hit that March 15th deadline that applies to all crop insurance.
I can make that.
All right.
Okay, one more random question. I have a conventional neighbor who's not so conscientious about spraying. I'm a little concerned about drift from his fields kind of coming into mine and contaminating my organic wheat. Can I insure against that?
You know, unfortunately not. But there is a little bit of a silver lining with the program. Those acres that you take out because they got drifted on, those don't count against your yield. And so as you're building your yield history with RMA, you won't have a loss or a lower yield because of those.
Okay.
I would, however, recommend if you're really worried about this neighbor, try to get the insurance company's name that he uses for the spray applicator, because you should be able to get some sort of payout if you have a drift event from that.
Great information. You've been really helpful. What's your name?
Oh, it's Nate. Let me give you a card.
Oh, sure.
Now, sir, before you go, I do have to ask one question. What is the secret to looking so young?
Risk mitigation.
I'll buy that. Thanks.
So long.
Well, I would love to sit and gab all day with you, but I really must finish these policies. But if you want to review what you've learned about the opportunities and pitfalls to organic farmers with their crop insurance, let's ask yourself a couple of questions. How can farmers insure uncommon crops? What is contract pricing and how does it work? Hint, it's the bee's knees. Why is crop insurance during the transition period difficult for organic farmers? What are things covered by crop insurance and which are not? Why is it important to know if your farmer qualifies as a beginning farmer? And what are the most important paperwork deadlines for all of the above? Well, I really must get back to the grind now. Ruth. Oh, Hallie, real talent. Road trip to Madison, I tell you, is there anything better?